The following program is paid for by the Real Estate Radio Network.
You're listening to Real Estate Radio Fresno on 105.9 The FM KMJ. Now, live in studio, your host, local real estate expert, Craig Barton.
Good morning, Central Valley. I am your host, Craig Barton, and welcome to the Real Estate Radio Network, the most important hour of radio each week, here on 105.9 The FM KMJ. Real Estate Radio is a show dedicated to bringing some rational thought to the crazy world that we live in and helping you to rebuild the Central Valley's housing and credit markets. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted advice, and that's exactly what you're going to hear every Sunday morning from 7 to 8 a.m. right here on 105.9 The FM KMJ. Thanks so much for joining us. Well, I got what I asked for. I no longer wanted to sit on a 6-inch chair.
No, now
I'm in the stratosphere. So
now you're 12 feet.
So
in the
all
air.
you people down there, now you know what I feel like.
I kind of think you look like the wizard.
A little bit.
Or the ringleader, or the guy with the big hat, the big top hat at the circus.
I don't compare you to the circus animals.
Yeah. I closely resemble that remark.
At least not to your face.
Yeah, exactly.
Okay, you're
Oh,
in trouble.
sorry. I'm blowing your cover.
Yeah, thanks, Kate. Appreciate it. Great to have you back. Yeah, great. All right. Anyways, as always, it is so good to have my special co-host, Michelle Pettiscavalli, here in the studio with us.
Good morning, Craig.
As always, Valley-Wide Homes. That's who you work for, right?
Well, I try.
Yeah. Or was
Most days I try.
Or that's who you worked for. Is that?
Am I out
No,
already?
that whole thing.
Okay.
Yeah. Okay.
Yeah, no, thanks. Should I turn in my pink slip, or are you handing me one?
I'm just messing with you. Michelle is a licensed realtor and a trusted friend.
Thanks, boss.
Appreciate it, kid. Don't take that to heart. I don't. You're starting to get misty-eyed on me. I don't want you to take the sharp objects away from our kids, please. We also have. We're extremely special to have. Extremely special to have. That sounded great.
You are special.
Yeah, Mike. We're extremely special to have you. We also have Mike Clark, regional manager from Sierra Pacific Mortgage, as well as this is a packed studio, kids. There's not enough room in here, and just don't call me fat. Kate Eiland and Elise Clausen. Elise, did I pronounce that correctly?
You did.
It's like Clausen without the L.
Exactly. Yes.
Awesome. From UBS Financial Services as our special guest host.
Yes.
And we're welcoming Kate back, by the way, from her extended trip to the Andes and sailing Kilimanjaro.
I hiked around the world.
You did. You were on remote for us.
I was.
You got all that tape for us, don't you?
I do. I've got some great pictures.
Great pictures. Good to know. Good to know. Funny, some of them, the majority of them centered around you and your husband wearing Kansas City gear.
We did go to a Chiefs game.
Yeah, exactly.
We did go to a Chiefs game.
Well, the Real Estate Radio Network gives us, collectively, the opportunity to reach so many people efficiently for one full hour each and every week. Our goal at the Real Estate Radio Network is to get you, our listeners, the timely and accurate truth about your local real estate market so we can help bring you
Back home.
Great job, kid.
Thanks.
Awesome.
My job's done.
I'm
out.
Are you
See
out
you
of here?
later.
All
Yeah.
right. Thanks for showing up. Appreciate
Just
it.
kidding.
Well, extremely excited about today's show. We're going to talk with Mike Clark, the regional manager from Sierra Pacific Mortgage here in Fresno, to talk about some of the major changes that we've seen over the last, 5 years, Mike? Mm-hmm. Exactly how they've affected how mortgage originators go about originating loans, and also to a certain degree, somewhat of a disconnect that we've seen in the industry as well, as far as those changes have taken place and the effect that it has on the consumer, the originator, and more importantly, I shouldn't say more importantly, but also the realtors, or the real estate agents behind those transactions. Also, another second half of the hour we're going to take a look at, we mentioned we've got Kate Eiland and Elise Clausen here from UBS Financial Services. And we're going to talk about defining financial planning. And that might mean something different to each and every one of you. So make sure you stay tuned with us. Again, if you have any real estate or mortgage-related questions or questions regarding the information that you hear on our show, please give us a call. It all starts with the phone call, right, Michelle?
Absolutely.
Yeah, exactly. We don't hear all the great stories and all the good dirt if you don't give us a call. Call us anytime, 800-979-3958. Again, that's 800-979-3958. You can also check out our resources online. Go to our website, search for your new home, check out our listings. You can also listen to past shows from the Real Estate Radio Network at REOFresnoHomes.com. To friend us on Facebook, use Press 4 keywords.
Friend Valley White on Facebook.
Or use Press 4 keywords.
KMJ, call Valley White.
To call into the show anytime. We would love to hear from you. Well, as we mentioned, we're going to get right to it as far as Mike Clark, the regional manager. And Mike, when you say regional manager, that's a big title, buddy.
What does it mean?
Yeah.
Well, I started in the business back in 1986 when dinosaurs roamed the earth. It's been totally uneventful since then.
Needless to say,
right, pretty boring.
Needless to say, we've all evolved since then.
Exactly. So, regional manager essentially just means that not only do I manage my own wholesale division, but I also oversee a number of regional retail branches as well. So.
Regional retail branches and the difference between, explain quickly to our listeners.
Sure.
Because there's two different platforms here. You've got a wholesale entity and you've also got a retail entity.
Sure. Yeah, that's very easy. I mean, essentially, the retail division or any retail loan originator is somebody who deals directly with a consumer. So Mr. and Mrs. Borrower want a loan, they're going to meet with some form of retail loan originator, whether that's an independent mortgage broker or, perhaps a branch of a lending institution. On the wholesale side, what that means is that those originators, once the loan is originated, they're then going to broker that loan or send it to a wholesaler who then acts as the underwriter and funder.
Hold it, did you just say broker? That's all the guys that caused this problem. No?
Well, we can.
Here, I resemble that remark because I'm a broker as well. So
I'm
saying that kind of tongue in cheek. Because
it's true. I actually I cut my teeth as an independent mortgage broker many years ago, and evolved from being a mortgage broker into the wholesale side of the business. So I do know both sides. And no, mortgage brokers are not the evil.
They're not the devil?
No, they're not.
Just trying to clarify. I mean, I think that's where we were all going.
You went right to it there, didn't you,
I'm sorry.
Michelle?
I'm all about clarity.
Michelle, stop beating around the bush.
It's just like any other.
How do you really feel?
Yeah.
Yeah, just like any other profession. The few will always spoil it for the many. So,
certainly.
Just the same way that you have quack doctors that can't be trusted, and ultimately it results in all sorts of regulatory reforms and tort reforms and lawsuits and this and that. The same thing happens with contractors.
Sure.
And the licensing that goes on with their. Mortgage brokers are no different. There's going to be good ones and bad ones. And the good news is with all of the regulatory shakeups and things that have happened over the last few years, there are more good ones now. A lot of the bad ones, have had to seek
are in jail
elsewhere. Yes, they're washing dishes and making license plates.
So you said regulatory reform. Let's talk real quickly. Not real quickly, but give us an overview of some of the major changes that we've seen in terms of how mortgages are originated and the major changes that we've seen in the process over the last 5 years.
Sure. Well, the list is rather long. It isn't something that you can just pinpoint one thing. I mean, certainly a major reform act was the Dodd-Frank Reform Act, and inside Dodd-Frank there was a number of elements or components to it, many of which were well-meaning, well-intentioned, and designed to protect the consumer, but ultimately, at the end of the day, may have had some unintended consequences.
Sure.
And that's what we're beginning to see now.
There was collateral damage.
Exactly, as the lender. So all of a sudden, what you really have is kind of a pendulum swing that's overcompensating.
Well, I was just going to ask, the Dodd-Frank Act affected our industry as well, and there's a lot of items in there that are still being hotly contested and really haven't been enacted yet. So is it the same way on the mortgage side of things, or is it pretty much that is now the law of the land and that's what it's going to be?
Well, it
was so robust. Like that piece of legislation was so robust that it.
There are some elements that are still hotly contested, and we're going to be getting some clarification here on January 17th, I believe. That gives us some more strict interpretations from the Consumer Financial Protection Bureau. which is the...
And that's with regards to the flat fee?
Well, it's and some other elements as well.
Okay.
But essentially the way it evolved was that under Dodd-Frank, there was supposed to be a Consumer Financial Protection Bureau that was created by the Act that was there to protect consumers in all matters of finance. And that's why it's affecting the financial planners. It affects credit cards, auto loans, student loans, and any other form of finance. But one of the key elements of that reform was that it was supposed to take all the other agencies, whether it was Fannie Mae or Freddie Mac or the Equal Credit or the Good Faith Estimate, and really every element of every form of consumer finance transaction, and lump it all under one governing body.
That sounds
easier.
That sounds great. What a good idea.
Yes. So...
I'm being
theory,
facetious.
Again, the idea is that you're going to have some parity between the agencies and that sort of thing, but it doesn't always work out that way. So
yeah, bigger's not always better.
No.
Yeah. And what ended up happening was that then even different divisions that were previously separately governed, if you will. Like, for example, you might have the good faith estimate of closing costs being issued by and monitored by one agency, and the truth in lending document that discloses your APR and total number of payments being disclosed or monitored by another agency. So the concept of putting those things together is a good one, so long as it's done right. And makes sense. But unfortunately, what's happened is they have put restrictions on the lender, which relative to, just to give you an example, we have the Home Valuation Code of Conduct, which was an appraisal reform, the RESPA 2010, the Real Estate Settlement Procedures Act revision of 2010, the MDIA, which is the Mortgage Disclosure Improvement Act, the AML-BSA, which is the Anti-Money Laundering and Bank Secrecy Act. You have the revised HVCC, which is the AIR, which was the Appraisal Independence Reform.
It sounded like
and this is all on top of the standard of the two major bailouts that we had. The first one, which was the HERA, the Home Economic Recovery Act or something like that, and then the ARA, which is the American Redevelopment and Reform Act. So all of these acts, unfortunately, have created really stifling regulations and documentation requirements, audit requirements, file retention requirements, and procedures, dates, and so forth. So it's essentially changed from what used to be a good loan, which meant you had a good job, you had money in the bank, you could qualify for the loan, that now if you miss a signature or you did a date wrong or you used the wrong form, it's now a bad loan. So it doesn't matter how good your property is or how low your loan-to-value is or how good your borrower is, because you didn't do something correctly from a regulatory reform piece. Essentially, it exposes the lender to a full repurchase risk on the loan.
And it's interesting you bring that up, because what you're stating there is not necessarily at the broker level. It's at the wholesaler level. In other words, that falls on your shoulders.
Correct. Yeah, it would be tantamount to, just imagine if you were a general contractor. You went out and built someone's home, and in the process you told them that the toilet was going to cost $800. In fact, the toilet cost $1,000. Therefore, you must give them the entire home for free. That is essentially the effect of these pieces of legislation.
So with unintended consequences, what has that done? Has it slowed the process of getting a loan? Has it increased the costs? What has that really done? Because we know on our side what the unintended consequences have been, and it's just that costs are going up. In fact, we ran by the bank this week and we were laughing because every little item has a charge attached to it now. And that's on the banking side. So there's got to be, I would imagine, some of the same
Without
things.
question, across the board, every single one of these things has added delay and expense to the consumer and had the opposite impact of what it was intended to.
It's fantastic.
So, for example, in the old days, days, you could order an appraisal report, and the appraisal report cost X dollars. And if you didn't, that lender for whatever reason didn't work out, you could take that appraisal report and take it over to lender B. Okay,
Right.
and now lender B could look at the same appraisal report.
Sure.
Well, unfortunately, appraisal portability was lost with all this, which means now you have to pay for a second appraisal. Well, in addition, because you can't go to the appraiser directly, you have to go through an appraisal management company acting as an intermediary to protect you so that you're not able to deal directly with the appraiser. Now, because of that added layer, the appraisal cost is higher. So not are you paying more per appraisal for the appraisal, but in all probability, if you have to change lenders, you're paying for two. Just one example.
Yeah.
I'm just curious if they were trying to cure unemployment by adding all these little layers of
It's
people
interesting.
working.
It's funny you say that because one of the questions I was going to ask Mike is, what has he seen as bottom line cost in terms of manpower over the last 4 or 5 years?
It's horrible.
Yeah.
It's horrible. We used to have what we call LPE, or loans per employee standards that we would have in our office. How many units, how many widgets can
Right.
X number of people produce? How many people does it take to
Wait,
produce
you guys
a
do
widget?
widgets too?
Yeah, we sell
They
widgets.
do everything.
And
Barbecue sauce, widgets, and loans.
yes, and they're no money down too.
And
by the way, for the-
No money down widgets.
But so what ends up happening is that over time, as everything that we've done to attempt greater efficiency,
Yeah.
it's actually harmed efficiency. So our productivity per employee has dropped at least in half because of all of the additional steps that we have
That's
to do.
amazing
with
to
an
me.
employee.
In half.
More than that.
Wow.
More than that.
That's amazing.
Yeah.
And costs have gone up, so it's harder to hire another employee because efficiency is down, right?
Yeah, it wasn't that many years ago. We were targeting, 25 to 30 loans per employee was the goal
Yeah.
in a wholesale center. And now, it's more like, 11, 12.
Wow.
Amazing. Well, when we come back, Mike's going to help to give you some of the top five pitfalls as far as how to make sure you get your loan funded. Make sure you stay with us. If you have any real estate or mortgage related questions or questions regarding the information that we are covering on today's show, again, call us anytime, 800-979-3958. That's 800-979-3958. You can also check out our resources online. Go to our website, search for your new home. Check out our listings at REOFresnoHomes.com. To friend us on Facebook, use press forward keywords,
Friend Valley White on Facebook.
or use press forward keywords
KMJ, call Valley White.
to call into the show. We want to hear from you, right, Michelle?
That's right.
Well, again, we've been speaking with Mike Clark, the regional manager from Sierra Pacific Mortgage here in the studio today. Make sure you stay with us. You are listening to the Real Estate Radio Network, helping to redefine real estate here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Come taste the flavor of the valley at the Fresno Buddhist Temple's Ginza Food Bazaar on Saturday, October 27th from 11:30 to 6 p.m. Located at 2690 East Alluvial Avenue between Chestnut and Willow. Teriyaki chicken, sushi, ribs, katsu dogs, plus many more food choices as well as desserts, a la carte and takeout. Live entertainment and a raffle for a $1,000 first prize and an iPad second prize, plus many more great prizes. For more information, call 442-4054. That's 442-4054. Or use press forward keywords Ginza Food Bazaar. Mortgage interest rates are at historic lows, and there's never been a more affordable time to buy real estate. Whether you're looking for your first home, moving up, or your next income-producing property, let the mortgage professionals at Valley White help. Valley White Homes has been helping homeowners with their mortgage needs since 1997. When it comes to the Valley's real estate, we know our way around the neighborhood. Call toll-free, 800-979-3958, and put the seasoned professionals at Valley White Homes to work for you. Valley White Homes, NMLS number 342062, 235952, California Department of Real Estate License 01228460. Have you ever thought about going solar? It's never been easier to go solar than with a SunPower lease. You'll start saving money the very first day. Arise Solar has a team of energy consultants ready to help you determine if going solar is right for you. Start taking control of your energy costs. Contact Arise Solar, your local SunPower Elite dealer at 449-8989. That's Arise Solar at 449-8989. Or use press forward keywords Arise Solar.
Did you know that all the tickets you can buy on different websites come from the same place? Did you know that you can buy every ticket you need to any event in the country, the whole country, from Pete's Seats right here in Fresno? If that's the case, you need to call Pete's Seats. Any ticket, anytime. Sports, concerts, theater. Hey, there's seats, and then there's Pete's Seats. Premium tickets for all events, local, national, worldwide. Don't settle for a regular seat when you can get a really good Pete's Seat. Online at peteseats.net or simply 294-SEAT. That's 294-7328.
How much should I be saving? When can I retire? What can I do to ensure that my estate will be left in the hands of my family once I'm gone? Is my hard-earned money safe in today's markets?
With all the uncertainty in today's world, all of us at the Eiland Group know it is our job to provide answers to these questions. Walk with us, the Eiland Group at UBS Financial Services. Call me, Kate Eiland, at 559-248-4097. That's 559-248-4097, and take the first step in protecting your financial future.
All rights reserved. UBS Financial Services, Inc. is a subsidiary of UBS AG. Member SIPC.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, again, we've got Mike Clark, Regional Manager from Sierra Pacific Mortgage, here in the studio with us, talking about all the legislative reforms that we've seen over the last 5 years as far as the origination of mortgages and really how it has affected the consumer on the street. And, Mike, one of the questions I wanted to ask you, we were discussing real briefly at the break, is this is going to sound pessimistic because all the
Really? With all those acronyms
yes,
spewing out? How could we be pessimistic?
Yeah, really, exactly. It makes you wonder, with the enormity of the financial crisis, how much of what went down, and Elise, you said this, what'd you say during the break?
Basically just that politicians' job is to make sure they get reelected, not necessarily solving the problem.
Because if they solve the problem,
then they're not needed.
Yeah.
Wow, that's a great...
I don't think they're needed now. We have a lot of problems.
I don't think they're really necessary now.
Let me just say, Barney Frank retired. Okay, so he's not around to witness all the great work that he did. It's the problem.
My goodness. They're not going to let us come back next Sunday.
They really are not. They really are not.
John, you're going to edit that out, right, buddy? So really, when it comes right down to it, how much of it was saber-rattling and how much of it was well-intended? You know, the constituent wants to see that you, as my representative, are doing everything that you can do to protect us poor, helpless people. Yeah, that's a whole other
point. Yeah, since they can't pass a budget.
2 weeks from now, at least we're going to talk about that in the studio.
Well, that is a very, very good point, because there's a huge amount of irony involved in the whole thing, which is that the greatest offenses that were taking place out there were taking place within banks. For example, the original Home Valuation Code of Conduct really was stemmed from one primary bank's wrongdoing.
Yeah.
And the collusion that was taking place between lending institutions and their panel appraisers, undue influence of the valuations and so forth. And when the whole thing was all said and done, when all the reforms took place, guess who's exempt?
The banks.
Yeah. But all of this would happen within the confines of the law. Besides, you hear the stories of people being ripped off and that kind of thing. But, really, this was how the legislation was set up. And we'd like to point out, which is, I think, totally ironic, third quarter earnings are out, and who is having record years, highest profits since 2007?
The banks.
The banks. And we work for one. I get it. I get why people are frustrated, but we're frustrated because you see that, and it's like, no way. How is that possible when you see what's going on in people's lives, what's going on in the economy, and then you see the banks, who are the very entities that were at the foundation of all these problems, continuing to make money ad infinitum.
There's no doubt that there's certain aspects of our industry, as far as the mortgage industry is concerned, that yes, there were a few bad apples when it comes right down to it, and yes, there were folks that were being taken advantage of. Yes, there were folks that didn't necessarily, quote unquote, understand their disclosures for whatever reason, or they just were playing dumb after the fact. There's always things that we can do to get better. I'm a firm believer, regardless of whether it's working great, regardless of, there's always minor tweaks, but the overhaul of the system that we have seen over the last 5 years, and when the day is done, it's hurting the the very individuals that it was intended to protect.
Well, the overhaul of the system still kept intact the entities that were at the basis of all this crisis, and the people are the ones that are kind of left out in the cold. I mean, again, we've seen it from a different point of view, but I think it's the same across industries.
Sure.
Well, there are so many layers to that irony. I mean, for example, one of the initials I didn't mention earlier.
The ABDs. I forgot my ABDs.
The NMLS, the National Mortgage Licensing System.
Yes.
Again, they went in and exempted the loan officers that work for banks. So only the third-party originators and people who actually, So it was just one of those one-sided things. You could also take a look at some of the foreclosure moratorium reforms, which really have been labeled to be consumer protection, advocacy type stuff.
Yeah.
When in reality, who is it really protecting? It's protecting the lender, because now the lender can wash their hands and say, "Nah, man, it's cheaper for me just to let the guy live there for 3 years without making a payment." Right. He's taking care of the place. I'll foreclose on him later. I already got the bailout money, so why should I foreclose on him now when values are low?
Right.
So, I mean, what kind of, is that really?
My exit strategy
Seriously.
isn't quite in line with the market right at the moment, so I'll just let it.
So again, you can kind of just go all the way down the list. I mean, loan officer compensation reform was another one where they had come out, and one of the silliest elements within Dodd-Frank was to essentially say, well, you must charge the same consumer the same amount on every transaction no matter what.
Yeah.
So it doesn't matter if it's harder or small, whatever. There's no criteria that where you're allowed to say that you're.
There's no greater risk with any. Well, that's what it comes down to, right?
That was the idea. But when that program first came out, although it's changed since then, again, banks were exempt when that first rolled out. They didn't have to play by the same ground rules. So whether it's the appraisal independence reform, the National Mortgage Licensing Act, the loan officer compensation, and so on and so forth, they just are not having to play by the same rules that third-party originators have. And the third-party originator concept was in essence that they would have a patsy, a fall guy.
Sure.
Say, well, somebody's got to be blamed for all this. So essentially the higher-ups in Washington certainly could not go back to the banks that fund all of their campaigns and make all their political contributions.
That's true.
They can't. I forget the banks specifically, and somebody could look this up, but for example, you mentioned Barney Frank. I mean, if you look back on his top 5 primary contributors were banks. So
well, now you're seeing there's a lawsuit against the Bear Stearns, who's no longer in existence, and J.P. Morgan, the company that absorbed them, probably forcibly by the government, is like, hey guys, by the way, if you sue them, you're suing us, and you are the ones that forced us to absorb them. So the whole thing, it doesn't make any sense. They are looking, like you said, they're looking for a scapegoat in this whole thing, but they can't go after the very entity that they really necessarily should go after.
What was one of the statistics in the Inside Job movie we saw? 5 lobbyists from banks for every politician out there.
Not surprising.
Actually, 5 per politician. I was just shocked. I don't know why, but I was. 5 people.
There's too much at risk. But and I say too much for politicians at risk.
Right.
So how do we make a change? How do we make a difference? Let's start there.
Wow.
I have no idea.
If our listeners are watching online, you're seeing 5 people in the studio shake their head from left to right simultaneously at the same time, meaning that
it's such a big problem.
I would say first and foremost, when we recognize that all of these regulatory reforms, good or bad, well-intentioned or otherwise, are coming directly from Washington, D.C.
Right.
You may have some minor, California state legislature stuff, like these carbon monoxide detectors or something like that, but
that's a pimple on the butt.
It's
of
a
life.
pimple. Really,
it really is. Down to it. Comparatively speaking, it is. Sorry,
Johnny, you better cut that.
There's a vision.
Wow.
But really, so at the end of the day, the key, in my opinion, is to get our voices heard by the legislators in Washington, because and again, I mean, I think we probably heard this on the debate the other day. One of the candidates was saying that the Dodd-Frank bill, although well-intended, does have some unintended consequences.
Well put.
unless we can get into their minds those specific areas where it's falling short and make it evident, to where somebody, because when you think about it, everybody has to go out and try and refinance or buy a house sooner or later. I always joked about this, and I said, once all the the legislators in Washington have to go get a loan, all this stuff's going to go away.
Seriously.
Make it go away, huh?
They're going to be tired of it.
We did that? Really? That's ridiculous.
Wait, what?
So.
Yeah. Interesting enough. You're exactly right. A couple pitfalls real quick as far as how to ensure that your loan funds on time.
Well, very good.
Don't try to get one in the first place.
No, yeah, pay cash.
Pay cash.
The first thing I think foremost is to just embrace the fact that times have changed.
Yeah.
There was
it's a new normal.
Yeah, there was a period of time where, let's face it, if you could fog a mirror, you could get a loan.
Right.
That was the idea. All these stated income, no document, no asset, whatever, and there was all sorts of different loan programs out there. Those things just simply don't exist.
Yeah.
Nowadays, everything is all about qualifying for the loan. There's under the the Fannie Mae Loan Quality Initiative.
There's another one.
You have to demonstrate your financial ability and capacity to repay the loan. And
Imagine that.
Yeah. So
What?
well, no.
That's shocking.
Wait, I got to pay this back?
Yeah, I get, but the idea being is that we have so many different things that are out there that are affecting the lender who you're going to. That any person, whether it's the realtor involved in the transaction or the consumer, just needs to be prepared that these things exist. Don't go in with unrealistic expectations. I still have people saying, well, can we close in 2 weeks? It's just like, what world are you living in?
Right.
Just the Mortgage Disclosure Improvement Act, for example, it has a mandatory 7-day waiting period from the time that you took the application as defined by RESPA, right?
Sure.
Business days to the date of consummation, which is the date of the note, not the date that it and then if one thing changes, the whole thing has to be redisclosed and start over again.
Right.
So it's just not realistic when you realize, and doesn't mean it's your loan officer's fault necessarily.
Oh, it's mine.
It could be.
It's my loan officer. I'm an agent. It's my loan officer's fault. I have about 10 loan officers running the city for me right now. Craig being one of them.
I was going to say. And
I beat him with a stick on Friday, and it hasn't helped. My loan is not funded.
And I guess if I was to try and sum it up, without necessarily going bullet point by bullet point, but I would say that the agents, really, the real estate agents, have a tremendous amount of control over what that package looks like and what documents the lender is seeing.
I'm not feeling it, though.
Yeah.
I'm not feeling in control.
Well, but you are in far more control, let's say, if what you've been given is accurate and well presented. If the real estate agent, for example, is aware of the fact that there are property issues, the time really to address the property issues, the fact that the sink is missing and the ceiling fans are ripped out and the carpet's out of 3 bedrooms, the time to deal with that is right when you're taking the contract, not to wait until it gets all the way to closing and then say, oh, there's a problem and it's my lender's fault.
Wait and let it be brought up. Bring it up immediately.
And there was a file that we had actually run through your particular company that there was a countertop missing. And I sent the copy of the appraisal to the listing agent. And the listing agent called me up with guns a-blazing, and he was ready to tar and feather me. And I said, buddy, listen, I am part of the solution, not part of the problem. You need to just tone it down just a little bit, and let's have a conversation about it. I said, how long have you known? Exactly what you said, Mike. How long have you known the countertops have been missing? Well, they've been missing since the beginning of the... I said, exactly. And I discussed it with my client, and we had a solution. We still have the same solution. It's an economic solution, and it doesn't cost your seller a thing. I just need written consent for us to be able to do what we need to do so we can close this transaction. Right. Still wasn't a happy bird, but I can't control that. But it does all come down, Mike, to setting, I think, realistic expectations. Also taking responsibility for, as a listing agent, your responsibility is get those utilities on. Make sure that there's no reason for a reinspect. Are there CO2 detectors? It's the law. There's certain requirements and certain things that you can do on every single transaction. And if you don't sniff enough transactions, start asking around. I mean, really, seriously, if this is your only listing and the only listing that you're going to see or the only closed deal, hopefully, that you're going to see in the next 90 days, you need to ask around and you need to make sure that you've got all your bases covered and that you're being proactive and making sure that you're not causing, you're not spending somebody else's money like it's their money.
I'm recommending a workshop.
Well, it's
Honestly,
funny. It's
for
funny that you
agents,
say that.
no idea.
We've actually had.
You did the appraisal workshop.
Well, even prior to that, we did a series of compliance workshops for loan officers, and we are totally open to opening that up to the real estate community. So it doesn't have to be loan originators. I am available. The head of our compliance department is available. My account executives, whatever. If we need to come in and do smaller workshops in a real estate office, our goal is to get the front end in the trenches, the realtors educated on this stuff, so that they know what those pitfalls are, so that they can properly draft the purchase agreements, and ultimately it makes it smoother for them and us.
Sure. They can complicate it as much as they want, or
I resemble that remark.
Thank you. Or as little. No, you actually try. You try to keep it nice and lean.
Tidy.
Well, again, if you have any real estate or mortgage-related questions or questions regarding the information that we are covering here on today's show, if you want to know more about HVCC, MDIA,
ABDs,
AIR, all that other good stuff,
all the acronyms,
call us anytime, 800-979-3958. Check out our resources online at reofresnohomes.com. Or use press 4 keywords.
KMJ, call Valleywide.
To call in to us anytime. We'd love to hear from you. Well, coming up after the break, as we mentioned, we have Kate Eiland and Elise Cousin from UBS Financial Services to help talk to us about the importance of financial planning. And let me tell you, it means something different to everyone. Make sure you stay with us. You're listening to the Real Estate Radio Network, helping to redefine real estate here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Come taste the flavor of the valley at the Fresno Buddhist Temple's Ginza Food Bazaar on Saturday, October 27th from 11:30 to 6 p.m. Located at 2690 East Alluvial Avenue between Chestnut and Willow. Teriyaki chicken, sushi, ribs, katsu dogs, plus many more food choices as well as desserts, a la carte and takeout. Live entertainment and a raffle for a $1,000 first prize and an iPad second prize, plus many more great prizes. For more information, call 442-4054. That's 442-4054. Or use press 4 keywords, Ginza Food Bazaar. All it takes is one call to the professionals at Valleywide Homes, and you'll start building wealth in real estate. Whether you're looking for your first home, moving up, or your next income-producing investment property, let the experts at Valleywide Homes help. There's never been a better time to get into the real estate market. Visit our website at reofresnohomes.com or call toll-free 800-979-3958. That's 800-979-3958. And put the seasoned professionals of Valleywide Homes to work for you. Have you ever thought about going solar? It's never been easier to go solar than with a SunPower lease. You'll start saving money the very first day. Arise Solar has a team of energy consultants ready to help you determine if going solar is right for you. Start taking control of your energy costs. Contact Arise Solar, your local SunPower Elite dealer at 449-8989. That's Arise Solar at 449-8989. Or use press 4 keywords, Arise Solar.
Did you know that all the tickets you can buy on different websites come from the same place? Did you know that you can buy every ticket you need to any event in the country, the whole country, from Pete's Seats right here in Fresno? If that's the case, you need to call Pete's Seats. Any ticket, anytime. Sports, concerts, theater. Hey, there's seats, and then there's Pete's Seats. Premium tickets for all events, local, national, worldwide. Don't settle for a regular seat when you can get a really good Pete's Seat. Online at peteseats.net or simply 294-SEAT. That's 294-7328.
How much should I be saving? When can I retire? What can I do to ensure that my estate will be left in the hands of my family once I'm gone? Is my hard-earned money safe in today's markets?
With all the uncertainty in today's world, all of us at the Eiland Group know it is our job to provide answers to these questions. Walk with us, the Eiland Group at UBS Financial Services. Call me, Kate Eiland, at 559-248-4097. That's 559-248-4097. And take the first step in protecting your financial future.
All rights reserved. UBS Financial Services, Inc. is a subsidiary of UBS AG. Member SIPC.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, as we mentioned, we are going to talk about financial planning. Okay, now...
Everybody's favorite topic.
I was going to say, yeah.
People are on pins and needles waiting for
I know, they
No,
can't wait.
no, don't turn that dial.
Turn that dial.
No. We're going to make financial planning look sexy.
That's right. That's right.
We do every day.
Yeah, there you go. Well, we've got Kate Eiland and Elise Cousin from UBS Financial Services here to talk to us, really to talk to you about the importance of financial planning. And it does mean something different to everyone.
Yes, it is very personal. And that's where I think people might have a bad impression maybe of financial planning. It's not cookie cutter.
Right.
There are a couple different reasons. Actually, there are many different reasons why people would want a financial plan. It's not always the same. But the classic example is the client is getting close to retirement. Maybe they're 5 to 10 years away from that. And they want to know if the assets that they've accumulated and the income that they're expecting in retirement is going to get them through. And
hopefully there are some assets that
and
they've
hopefully there
accumulated.
are,
Otherwise-
exactly, yes.
Yeah, and really people want to know, what is my retirement going to look like?
Right.
Okay?
Right. Well, and a lot of the times, I mean, depending on the level of assets, but that can be dictated to us. So with our planning process, there's no judgment as far as what you want your retirement to be. Some people, it's, I want to travel and I want to golf and I'm never going to be at home and, forget the grandkids, like I'm going out on the road, and so you've got that. And then you've got people who are planning on maybe working part-time, people who are going to stay home and garden, people who want to spend time with their family. And so it's really important when you're talking about retirement financial planning, that you start to formulate those ideas. And we kind of help people get there. I mean, because we've done so many plans, we know a lot of the times what people don't think of that they might want to do in retirement. So, like, we had a client in a couple weeks ago, and she really had no clue. She was like, well, I'm just going to live. And we're like, well, what about travel? Have you thought about doing this? Oh, yeah, I have thought that maybe that's something I want to do. And, oh, yeah, maybe I do want to buy a home on the coast. And, oh, and maybe I do want to do this. So a lot of the times you don't, because you're just working and working and working, you don't ever think about what you really want.
Not that there's anything wrong with
Not that there's anything wrong with
that.
Definitely not.
It is extremely, extremely important that every once in a while you look up to make sure that your direction is the direction that you wanted to be headed.
And that's a great way to put it. I mean, that's kind of what the financial planning does with regards to, to retirement.
Yeah.
There's other types of financial planning. So major purchases. Clients can be in retirement.
Absolutely.
Or they can be nearing retirement and they're planning on, maybe buying a home. That's a big one that we get right now is, I'm living in a house now. If I want to buy another home that's X amount of dollars, what does that look like? Should I sell the house?
Right.
Should I rent the other house out?
Sure.
Can I afford it?
Yeah, or going from, can I buy a home, to I have to move my spouse into a home. How will that extra expense actually impact our current retirement plan? Is that going to throw us off track? Am I going to be able to make it, just what does it look like? And just by being able to sit down and crunch the numbers, a lot of times it gives people a little bit more peace about the decision that they have to make. So we try to help clarify difficult situations for people.
Absolutely. And it can be fun things too. In fact, this week I got a call from a client who was thinking about investing some money. He's pretty close to retirement, but he called and said, Kate, I found this Harley that I really, really like. Can I buy it, essentially? And it's kind of funny to ask permission, because who am I to say yes or no? But it's like, well, let's consult a financial plan. We had already done a financial plan for this client, and I knew that without a doubt it was totally fine. And I said, go and enjoy yourself. But Elise and I were talking about this earlier this week. Like, how nice is it to have somebody to go to, just an outside opinion, where you can say, does this make financial sense to do this? Or if I do this, what is the impact on my financial life?
Sure.
And there are, it's not just somebody's opinion, like a family member who may or may not be receiving those funds at some point in time.
Because I don't want you to spend all my money, Daddy.
Sometimes that does come up. Yes, exactly. So it's just nice to kind of have an outside consultant to be able to ask those questions. Does it make financial sense? Can I afford it? And really, what is the impact? Because at the end of the day, and Elise and I talk about this a lot, financial planning is not to say, yes, you can do this, no, you can't. But here are your options. If you do A, this is what it's going to look like. If you do B, this is what it's going to look like. We're never short of our own opinions once we've done the analysis to say this is what we think is the smartest thing to do. But at the end of the day, here are your different scenarios. Go for it.
And based upon their individual goals, you're going to have to make some assumptions in terms of variables are concerned to try to quote unquote get us there.
Almost definitely.
Almost definitely.
Yeah, and that's been a big part of our planning. With the planning, you have to look at what are your investments going to make going forward, and then you also have to look at inflation. Capital market assumptions are, we think, a bit outdated. For instance, like our financial planning software, which is the best out there, has cash paying you 4%. If anybody knows of a money market out there that's paying you 4%, will you please give me a call? It's 559-200-097, because it just doesn't exist. So to plan then and have long-term assumptions, thinking that you're going to be making 4% on cash, then obviously as the riskless or risk-free asset, that means that the other asset classes returns might be inflated slightly. So we take real precaution to make sure that we think the returns are legitimate, not only just for current market conditions, but also for people's thoughts about the market.
Sure.
I mean, people have pulled way back. There's a lot of fear in the market, and we can't force somebody to go into the stock market or take more risk if they don't want to. We have to model that scenario in the financial plan. And inflation, inflation is a huge item that you have to plan for in a financial plan.
And especially since inflation isn't something that actually shows up on your statement, there isn't a line item for inflation. It's really difficult to understand the impact that it actually has on your investments. If you're earning, 3% and you have inflation at 3%, your purchasing power is essentially what?
Your
Zero.
flesh. Yeah.
Exactly. So, you've got to make sure that whatever plan you have, you're actually invested in a way that's going to help you keep pace and actually keep pace with, inflation, but actually do better than.
Yeah.
Otherwise, you're just going backwards at the end of the day.
Right. And we know that there are certain items in your budget that have a lot higher inflation than others. For instance, PG&E, the average inflation on that is what? It's 6% a year. I don't know if anybody knows that.
You know what? Wasn't Glenn here
We
last week? He
discussed
said
it
it was
last week.
8% or
So maybe
some
it's higher
crazy
even.
number.
Yeah. So there's healthcare, which is the biggest expense that people have in their retirement lives, and we have some facts here from the College of Financial Planning that states that a couple that reaches the age of 65, provided they live to normal life expectancy, which is around 85, so they spend 20 years in retirement, they can expect to have medical expenses in retirement of $240,000 in excess of what Medicare covers.
And that's what current Medicare covers.
Right.
Who
That's
knows
a good
what
point,
that's going
Elise,
to be
because
moving forward.
Medicare is going out of business in about 90 days.
It's already they're already borrowing from it, writing IOUs, and that doesn't account for if you or your spouse develop a serious medical condition like Alzheimer's, which has happened in my family, those costs can more than double. So it's something that you have to plan for. It's not a pleasant thing, which is why we try and joke that financial planning is so exciting. People hate it. We know that people hate it, but it's necessary.
Okay, let's clarify. People hate the process.
They hate the process.
They hate the
love
process,
the outcome.
But the outcome generally, leaves people with a sense of control.
I'd back it up a little bit farther than that, and I'm not the expert. You guys are the experts. But back it up even farther than that as far as they may not like the process, but even before that, even making the call or actually sitting down and saying, you know what, sweetheart, I really do. What are you doing for your retirement? What are we doing collectively for our retirement? What's our goal? Do we want to have our house paid off, and at some point we're going to get a reverse mortgage? We're going to pull that cash out and invest it at that point in time in the future, or whatever the situation is. It's just doing something about it in the first place. So many folks, and I use this analogy. And it's just a simple thing in terms of my folks. I considered my folks two of the most logical people and educated people, and neither of them had any life insurance. My mom's retirement was really, literally nothing. My father's retirement was a small pension and Social Security. And they're expected to, you're eating Fig Newtons, and it's terrible. It's absolutely terrible. When you see that reality, if that doesn't shock you, and the unfortunate thing is it may shock you, I'll never say too late in the process, but it shocks you later in the process in that you're wasting valuable time just having a plan.
Right.
Because doing the responsible thing isn't always, quote unquote, for a lot of people, the easy thing to do.
Right.
And that includes, being fiscally responsible in terms of the amount of money that you spend. Well, it's just so much easier to go out to dinner, 5 nights a week.
And that, a lot of the time, that's usually the sticking point in doing the financial plan is your budget.
Yeah.
Is figuring that out.
We have had so many situations where people are gung-ho about doing the financial plan. They understand the importance
And
of
then
doing
you
the
tell
plan.
them they can't go out to dinner 5 nights a week.
No, it's just
not
a
even
matter
that,
of
no.
putting
not even
together.
that?
It's putting together a budget. Sometimes we find that one person's been handling the finances. You come in as a couple, and you're going to be going through this process together. And well, then
The missus doesn't want to know what, or doesn't want the mister to know what she's been doing with all
Or
of it.
or vice versa.
versa.
That wasn't a
happens a lot.
sexist remark, just so you guys know. I just picked one.
Either
and went
or,
with it.
yeah, either
Yeah.
or.
And I think one of the things that is a fear for people when they start going through the budgeting process is they think that it's going to be somebody telling them what they did wrong or
You
what
get a
they
phone call from Elise, and Elise says,
Exactly.
I was just looking over
You
your
really
ATM
screwed this
statement
up.
from
You
really
yesterday.
spend this
and-
on this? Yeah, so it's a fear. People don't want to know, and then they're afraid also going forward that they're going to have to change, and people just don't really
fear change.
enjoy
Writing-
Sure.
change.
Yeah, writing your household budget is probably like a financial colonoscopy.
No, it really is.
Without the sedation.
Well put,
Yeah,
Mike.
Without the sedation.
That's exactly it.
Without sedation, potentially.
And we think we have a process that makes it a little more palatable, but at the end of the day, that part of the process that you have to be involved in it. You
Yeah.
have to get
You've
it
gotta
done.
be in.
And that is actually your expenses, your living expenses, your lifestyle. That is the foundation of every single plan. Because what we do with that information, the financial planning is all cash flow based. What money's coming in, what money's going out. Inflation assumptions, return assumptions, money coming in now, money coming in later,
Right.
that sort of thing. So we have to get a clear picture of what your expenses are so that we can extrapolate out into the future what those are going to be when you retire.
Right.
Knowing that certain things, like your mortgage, may drop off, certain liabilities may drop off. Depending on, like, as we talked when we kind of first started, depending on what your lifestyle is going to be like. If you're going to travel a whole lot, we may actually want to pad your travel budget a little bit more than what it was before you retired. But we can change all of those cash flow assumptions throughout time during the plan and really get a good picture. But again, if we don't know what you're spending, if we don't kind of know your habits, garbage in, garbage out is what
How
we
many
always
times,
say.
just out of curiosity, how many times have you sat down with a couple, assuming that there's two people involved in the process, and it be a situation where the train eventually goes off the tracks for whatever reason because
It usually doesn't happen in front of us. Like, usually we just...
We've only had a couple of instances
we've
where
only-
people have actually had a tense
Come to
where we
blows.
conversation.
need to like have a little timeout and
All right,
everything.
well-
But most of the time, the plan will just sort of that's like the point where the plan gets stymied is right there. Is then that there may not be any forward progress made because budgets may not necessarily want to be shared between spouses.
or control of those budgets as
Or
well.
control of the budget,
Yeah.
which is exactly it. Yeah, but provided that you can, provided that you can get it, and really all it accounts for is get the last couple months of your bank statements or wherever you spend. If you put it on a credit card, what have you. Just take it as a line item and go through those things. The fixed expenses most people know about, your mortgage, your insurances, those kinds of things. Food is usually one of those areas that, that gets a little dicey because people spend different amounts going out and that kind of thing. But once you can get that, then we pretty much do the rest of the work. And that's really all that it requires on your part, which, let's be honest, at some point in time you're going to have to know what you're spending, especially once you retire and you're living on more of a fixed income.
Well, yeah, don't you want to plan so you don't fail in the future
You
for
would
crying
think
out
so,
loud?
yeah. I mean, we certainly think it's important, but we've got some other statistics for you that 30% of people aged 55 or over has saved less than $10,000 for retirement.
And 76% of retirees have less than $100,000 saved.
Yeah, which doesn't necessarily mean that your plan won't be successful because it does depend on what your
It
lifestyle
just means
is.
you're on the top ramen diet once you retire.
We have another way of saying it, but we'll keep that off air. Yeah, absolutely. But so there are a lot of people who have not necessarily planned for that. There is never a time in which it's too late. there are times when your decisions are going to get harder. But again, that's where Elise and I come in with that. It's a non-judgmental process. It really is. We have seen so many of these financial plans that people's budgets and people's habits and lifestyles, nothing surprises us anymore. I mean, it just is what it is. But it's nothing to be judged about. It's just we need to get a handle on what those things are so that we can then guide you. Because at the end of the day, people come to us because they want us to make money for them. The amount of money that we can make for them is going to be dictated by really how much they need. Because our first choice would be not to take any more risk than they necessarily have to.
Of course.
The only time that we really suggest that clients go aggressive, and this rarely happens, is if there's really a shortfall and we've got a stretch. And in that regard, we might even pull back just because we don't want there to be any losses in the market and that kind of thing. So the planning really helps us as advisors to dictate how your assets are managed, because then we know what goals we're shooting for. It's not really fair to go to an advisor and say, make me as much money as you can. It's like, well, under what context? You know what I mean? So that's kind of the basics of financial planning.
Bottom line is it all starts with one call, right?
You got it.
248-4097. Again, 248-4097. Again, if you have any real estate or mortgage-related questions or questions regarding the information that you hear on our show, call us, 800-979-3958. You can check out our resources online. Go to our website, reofresnohomes.com. To friend us on Facebook, use press 4 keywords.
Friend Valley White on Facebook.
Or to call us. We'd love to hear from you. Use press 4 keywords.
KMJ, call Valley White.
To call into the show anytime. Well, a big thank you to Mike Clark, the regional manager from Sierra Pacific Mortgage. Again, if you have any real estate offices that are wishing, that would like Mike to come into the office and train, contact Mike directly. It's Mike C at spm1.com or 476-2660. That's 476-2660. Also, a big thank you to Kate Eiland and Elise Costin from UBS Financial Services. Again, all it takes is one call, 248-4097, to speak with the girls, and they'll start working on your financial plan. A big thank you to Michelle Pettiscavalli, my co-host, joining us today. Thanks so much, kid, for being here. Appreciate it. Big thank you to Johnny B behind the mics. Johnny, you always make it sound so good, buddy. Our goal at the Real Estate Radio Network is to get you, our listeners, the timely and accurate truth about your local real estate market, so we can help bring you
back home.
Don't forget to tune into the Real Estate Radio Network next Sunday at 7 a.m. right here on 105.9, the FM KMJ. Make it a great day, Central Valley, and we will see you next week.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.